all right. Hey, today we're not doing Warzone. Today we're actually talking business and taxes, which is why I'm wearing the suit right now, or the shirt and tie right now. So I'm gonna try something a little different for the lives. Sometimes I'll go live. Sometimes I just can't because I'm doing certain things. Um, but we are. This one is going to be a scheduled live, so I'm pre-recording this. And then publishing it using the different software. And I can go over that at a later time, so that way you're aware, how I did it, and you can do it yourself. Today, we're going to be talking about boy, oh boy. So the U.S. government um, has created a new process. FinCEN has created a new process because there's a lot of shell companies and there's a lot of foreign stuff, funny business, dark money going around, and so Vincent is trying to get a handle of it, right? So they created this beneficial ownership information report requirement um, for corporations. Essentially every corporation. There are some exceptions, we'll go over that, but essentially every corporation is going to have to report um, beneficial ownership, who owns a company, what the circumstances are, etc. So we're going to go over that process a little bit. It is fairly simple. You probably won't need a CPA enrolled agent or an attorney or anyone else to actually do it. It looks like it's working, but time will tell, because we'll go over the reporting requirement dates. We'll go over certain things regarding that. So let me go ahead and turn on the desktop here. Give me 1 second. All right. So we're actually going to start by going over what boy is. Here we go. We're going. All right. So what we're going to do is take a look at what the boy requirements are, right? Um, Here, let me. You gotta love it. Here, okay. So we are going to duplicate. There we go. All right, so you should be able to see my desktop now. So basically, the Financial Crimes Enforcement Network Division of the United States Department of Treasury has created this process, right? And so if you go to that website up here, it'll be fairly simple to find this information. I'm just going to kind of briefly go over the highlights so you're aware of what you have to do if you're a business owner by the end of 2025 or 2024, by the end of this year. So the Boyer report. Oh, that's the actual Boyer report. So this is one of the brochures that's essentially created in 2021 to bring a little transparency to the ownership of those companies, who owns them, um, what percentage of ownership, etc. Um, who has to report is essentially any company, whether it's foreign or domestic. It doesn't matter whether you're overseas or here. You have to report ownership status, and there are several ways to do that. Right. So we're going to jump right into how to do that. So once you hit the boyafiling.fincen.gov website, you'll see several options on how to file a report. Right. You can file it by through a PDF, but make sure you have Adobe Acrobat 8 or higher, because if you have anything less than that, it's you're not going to be able to read it. You're not going to be able to transmit, right? So basically, you have the option of filling out a PDF form and then sending that to them at the end. So this is kind of their PDF form here. Gives you instructions. Let me see if I go ahead and make this bigger so you can see it. Yeah, okay. So this is their essentially their information report, and this is a similar system to what you're doing with like your FACTA reports, like your foreign your foreign asset reports that you have to file if you have any foreign income or foreign assets. So you have here your PDF, your essentially what your report is. Anytime there's a correction, also the ownership status, you have to file it. And there are time frames on when you have to file it. We'll go over that during the fact. The frequently asked questions site that they have, it's actually pretty good. So yeah, so this is the reporting requirements, and so now you're filling in all your information: company name, tax ID number, jurisdiction, whether it's a foreign or domestic company, address, etc. You continue to go down if you have a FinCEN ID. Individual, whoever owns it, right? So first name, last name, identifying information for that individual, the current address of that individual, and then the type of document, right? So whether it's a driver's license, whatever it is, um, yeah, whether it's a driver's license, whatever it is, you put that information in there, and then you go over the ownership information, right? So whether it's a tax exempt entity, the address of that owner, etc., and then you add any attachments, and then you're going to go ahead and send that to FinCEN. Um, Submit it right there, right? So it'll be essentially da 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 da, and then you upload the PDF. So that's one way to report. That's one way to do it. The other way to do it is by doing it online, right? So you don't have to have Adobe Reader. It's actually a online form with the same questions. And so basically you have this information here, right? So everything that's on the PDF is going to be on here. So you go down, you go to the next one. Uh, so, I mean, it looks like they're using fairly new technology. So it's not like some of the IRS reporting requirements that I'm used to dealing with. So it actually looks like it's going to be a fairly decent process, but time will tell. There might be some back end stuff that prevents you from, filing the reports or whatever it is. And then the third way to file is, so for example, I do some software engineering. You can create an API to connect certain systems to other systems and automatically submit those reports. Something I may look at doing, in the future is just, since I'm actually in the process of building software, tax software, financial software. I might just integrate that into this, and that's why I'm kind of taking a step back from tax preparation and actual bookkeeping and payroll, because that is time consuming. So I'm going to focus more on software development. Hopefully, I'll have some information soon on how that's going. Okay, so that's essentially the reporting, how you report, right? So the next thing we're going to talk about is their frequently asked questions, which is actually pretty good, right? So you go to the website and you'll see basically frequently asked questions. We're not going to go over everything, but we're just going to go over some of the the questions here, right? So they have all the way through O, right? So we'll start with one of the first questions, right? So um, what is beneficial ownership? So whether you directly or indirectly own the company. Um, this is what I was saying. In 2021, they passed the Corporate Transparency Act, so that way this process was created, and it's all for all entities, right? Federal, state, local, tribal. I mean, that's who falls under this jurisdiction. That's who has to actually file the report. Um, let's see. Okay, so how will companies become aware? So they're making it available to companies, or they're making the information available, but it's not really out there. Some people don't have any idea that they have this requirement coming up for the end of 2024, which is why I make a video on it, right? Okay, so who should file the report, right? And by when? So this is key here. So let me see if I make this bigger. Where are the dates? Oh, we'll get to that little chart here. Okay, so boom, boom. process. Okay, here we go. So, should company file beneficial ownership and by when, right? And so basically, if you created your company before 2024, you have until the end of the year, um, or rather, yeah, until the end of the year to file the beneficial ownership information report. All right, and you can do that through several methods that we just discussed. If you started your company in 2024, you have 90 days to file a report, right? So once you get the stuff from the Secretary of State, whatever state you're in, you have 90 days to file the board report. And if you started your company in 2025, you have 30 calendar days to file the report, right? So essentially 30, 90, and if you've already an existing company, then you can file it before the end of the year, essentially December 31st. So, okay, so essentially, when do I have to report? So we just went over those days there. Beneficial ownership, submission, company ownership, where can I file a form? Okay, we already discussed you can file a form on the actual website or through that PDF form. Do you need a CPA or enrolled agent to file a? No, you don't, right? You can do this on your own. And they have a lot of resources where you can actually go ahead and get that done. Doesn't seem like a very complicated process, but it's a process nevertheless, right? It's an additional thing that you have to do to manage your business. So it is what it is what it is. Um, so anyone can file a report on the company's behalf. So anyone you designate as a person that can file, they can go ahead and file that. Okay, so what companies are required to file? Like I mentioned, foreign companies, domestic companies, LLCs, S corporations, they fall under this, right? There are 23 entity types that are exempt from filing. We're going to go over that here in a little bit. But essentially, this is a decision matrix that they came up with, where essentially, if you fall under U.S. law, you're ultimately going to end up here. You're going to have to file, unless you're not in actual operation. Then you're not in business. Then you don't have to file anything. But for the most part, everyone's gonna. This is all taking you here, no matter what your answer is, unless you fall under these categories, right? So here are some companies that are exempt from filing. Any security, reporting issuer, government authority, bank, credit union, depository, money services, broker dealer, securities, other act, investment company, or investment advisors, venture capital fund managers, insurance companies, state, commodities, accounting firms, public utilities, financial market utilities, pooled investments, large operating company, entity assisting a tax exempt company, and tax exempt entities. And then if you're just not active, you don't have to file. So if you are one of those exempt companies, then you don't have to file. But for the most part, everyone in business is going to have to file one of these, right? There's some trusts. Is a trust considered a reporting company if it registers with a court of law? No, right? So um, trusts don't fall under this at all. Let's see. Activity revenue, determine whether reporting requirement, sole proprietor company. No. So if you haven't actually registered your business with the state as an LLC and you're just a sole proprietor using your social security number and your name, then you're not, but you are in business, then no. Like if you're doing Uber or if you're doing Lyft, you're not going to have to file this report. It's only for the actual LLCs, right? Or companies or S corporations or C corporations. Anything other than the companies, the 23 entities that are not required to file this. So let's see. Can a company create a registered U.S. territory be considered a reporting company? Yes. So do the BOI requirements apply to S corporations? Remember, I had mentioned that whether you're an S corporation or not, it doesn't matter. Yes, you are supposed to report beneficial ownership. if a domestic corporation or limited liability is not created by filing a document with the state or similarly, is it a reporting? No, right? So you have to file your actual reporting with the state to become a beneficial, a boy reporting company. And then there are some questions in the fact when I went over it that it's typical, financial and IRS stuff. So, are homeowner associations reporting companies? Depends, right? So, there's a lot of it depends, and you're going to notice that as we're going through the fact, right? It's actually pretty funny. All right, so who is beneficial owner of the company? A beneficial owner is an individual who either directly or indirectly exercises substantial control over the company, owns, controls at least 25% of the shares. So if you own more than 25% of the shares, then you have the reporting requirement duty, right? So just keep that in mind. Um, let's see, small entities. Okay, who is substantial control? Depending on your title of the company, senior officers, appointed, appointed people, certain officers who are appointed for that authority. So this is essentially, let's see substantial control, right? So senior officers are any individual holding the position or exercising authority of a president, CFO, CEO, COO. Those are senior officers. And then you have the people appointed, like maybe the person that's working for the CFO, right, might be appointed as a senior officer. Um, so there are also important decision makers that can file this report. So basically, any individual who directs, determines, has substantial influence over important decisions made by the reporting company, including decisions regarding reporting companies, all that stuff, right? So basically, they're trying to make the ability to report this as wide and as easy as possible. They don't want to restrict it to, well, you have to be an attorney, and so that's essentially the goal of the program, right? They want to make it as easy to report so that people and companies stop playing the shell company game that has been played since the beginning of time, right? Since I've been working in the industry, there's always been this, hey, let's start a company out in the Bahamas and doing this. Actually, Sam Backman Fried just got arrested, what was it, a year ago for having offshore stuff and Bitcoin fraud, and I mean a bunch of other stuff. We can get onto that in another video, but that's what they're trying to prevent. Um, so if it's a partnership, it depends, right? It really is. If you file an LLC, just assume that you're going to have to file this report. Whether you're taxed as a partnership, an S corporation, doesn't matter. If you have an LLC, if you have a C corp, if you have an LLC, just assume that you're going to have to file this report, unless you fall under those 23 exemptions: securities, insurance agencies, accounting, investment advisors, things like that. What I'm interested in, and I haven't seen, is penalties, because FinCEN, the Treasury Department, the IRS, they love issuing penalties, right? Department of Labor, I mean, that's their thing. So let's take a look and see if there are any penalties for violating the BOIA requirement. And it looks like there is, right? So, what penalties do individuals face for violating BOIA requirements? So, as specified in the Corporate Transactions Act, a person who willfully violates the BOIA reporting requirements may be subject to civil penalties of up to 500 for each day that the violation continues. For each day. So let's say you forget to file your BOIA, you have no idea about what this BOIA thing is, and you forget to file a report. Well, you could be subject up to 500 a day in terms of penalties. Um, and the penalty is adjusted annually for inflation. So as of reporting of this publication was a couple of seems as it was in actually no updated in 2024. So April, as of 2024 April, it's at 591. So for every day that you don't file this report, if you have to, it's at 591. And then there's certain language in here that's interesting. So willfully violates, right? So how are they going to determine willfully violates? If you forget, is that a willful violation, or was it just like, oh man, I'm sorry, I didn't know that? That's still to be determined. We still haven't seen how that's going to play out. From my just knowledge of how everything works right now, the country is especially the government. They're clamping down on money. They need money. They've spent so much money that they just are increasing audit. They're increasing audits on smaller businesses, and so this might be another way to collect money. I mean, don't get me into the conspiracy theory, but that's kind of what I'm seeing here. We'll see what happens, but right now, if you willfully violate, it's $591 per day you don't file. Also, a person who willfully violates the BOIA requirements may also be subject to criminal penalties of up to 2 years imprisonment and a fine of up to $10,000. Potential violations including willful failing to file a BOIA report, willfully filing false beneficial reports, or willfully failing to correct or update previously filed BOIA reports also fall under that period, right? So if you move, or if the ownership changes within a company and you don't file a report on time, and you willfully don't file a report on time, again, it's going to depend on how they come up with this willful, or how they define this willful thing, right? But if you fail to file it, I mean, in 5 days, you do the math, right? So it could be a couple $1,000s in penalties just for filing late. So make sure you file this, just at least as it stands now. Things change. They might come up with, it's an election year, so things are always going to change when it comes to finance and taxes. So just be sure that you stay aware of all that, right? So who could be held liable for violating BOIA requirements? Both individuals and corporations can be held liable for willful violations. So let me see something. Let's do a search here. Let's see. Okay, so nothing on negligence, nothing else. So essentially, everything is relating to this willful violation deal. You know what? You know what I want to do? Actually, very interesting. Let's Department of Treasury. Actually, let me go ahead and close this here. Okay, so let's try this, right? So, and I'm doing this live, so we'll see. Oh, no, that's not what we need here. What we need is this, right? Because in the age of AI, um, let's see maybe if we put it into ChatGPT, start asking it questions, and actually see what happens, right? So let's see here. Okay. Okay, so we're gonna go to that. We're gonna put it in there, and then we're gonna go here. All right. All right. So now what we're gonna do is what I did was I copied essentially all this stuff in here, and then put it into WordPad, and then we uploaded it into ChatGPT 4.0. And now we're going to play around with it. We're going to see what kind of questions we can ask it, right? So let's see. Oh, I put a slash. sure it will figure it out, or maybe not. Let's try it again. Let's stop. Okay, so there it is. So it's the fact, right? So it actually understood and what it is. Any penalties for filing late? So it's actually reading the document. Yes, there are civil penalties of essentially what we discussed here, right? So that's another way where you can digest a lot of this information specific to your business is right. So you can essentially download the information, put it into an AI model, and then start asking it questions. And for the most part, it's going to answer. I mean, it's going to generate a response, right? You can always verify it through, by contacting a professional or actually going through the material yourself and comparing it. But this is just an easy way to handle it, right? So that's really pretty much it. That's all I wanted to talk about for this tax tip. Eventually, we're going to get into more topics. I have all the president's tax returns, so we're going to go over that politics. I mean, I'm going to be a little bit more consistent with it since this is exactly what I'm going to focus on from now on. As always, just let me know if you have any questions, comments, concerns. Go on the website, get some additional information if you want. Leave a comment for any future videos. Don't forget to like, subscribe, and then I'll catch you all in the next one. So now I have to go over to my other PC and then turn it off. So I have a dual PC set up with a KVM switch, and I'll eventually make a video on that too. So